Okay, welcome to the Swing Trading with Cycles channel. It's November 29th. It's just about noon. We're going to do an update on uranium today. And the big theme is uranium is declining into a 3-year cycle low. We've been saying that on these videos for months now. I think that's why the bearishness, right? And that's why we've been making lower lows and lower highs. And so the question is, where do we stand in that cycle? How close are we to the end of that? And so we'll start with looking at CCJ as our proxy. We'll look at the uranium to SPX ratio really quickly. We reviewed this in previous videos, but in the previous video, I should say, so definitely take a look at that for more detail. And then we'll look at the commodities long-term cycle view, since that is sort of the bigger picture. Where are commodities kind of headed? Where are they in their cycle? And then we'll look at the outperformers, which we reviewed in more detail in the last video. But we'll see where do they stand the last couple days, especially as the broader market is moving into a daily cycle low, as I've tweeted about, and the video update on the broader market. If you haven't seen that video update on the broader market, definitely take a look, because that is going to help. That's going to help give you some context, because ultimately anything that happens in the broader market is going to really tilt the scales of what happens with uranium, right? So let's jump into it, right? So we'll look at CCJ first, and then let's jump over to CCJ. So for CCJ, let's jump to our daily chart. Add the drawings back on. So we know we've been in this kind of like choppy mess since this gap down. The yellow line is your 200-day moving average. The blue line is your 10-day moving average. So you can see we're below both at this point, and the 10-day is below the 200-day. That's a classic example. A short-term moving average is below a long-term one, that you're in a very, very long-term downtrend. It makes sense. The most current prices are lower than the average prices from many, 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 many days ago. In this case, 200 days ago. It means price is moving in the wrong direction, right? So we've had these little mini rallies. These little mini cycles. This was 15 days. This is 15 days. And now this is another one that's ended on day. Well, this is another one where this is day 16, which is to say we had this little swing low, which was on day 15 from here, right? So this was 15 days, a 9-day rally, and what is that? A 6-day decline. And then we had this little feeble 7-day rally here, right up to the 200-day moving average. Then we rolled over, but we didn't make a lower low. We didn't make a low below this day 15 low. And now we've come up here, but we did make a lower high. So we don't have a lower low, or I should say we have a higher low, but we have a lower high. What is that? It's called a range, right? It means you're not going in any direction, really. And when we look at the weekly chart, we'll see exactly why. And someone asked about the bear flag that's developing, which I talked about maybe a few videos back. And it's just still churning right now. Let's get rid of this. So it's still churning right now, right? And so everything here is happening inside the range of this big red candle. And again, as I mentioned in previous videos, it has a huge range, $27 as a high and $21 as a low. So a $6 range on like a $23 stock. That's huge. So you can see, this is the current week we're in. We've been just oscillating inside there for 1, 2, 3, 4, 5, 6, now 7 weeks. Right? And really at the lower end of the range. Now, what you'll also notice, though, is that the consolidation of the last 4 weeks, right? Well, actually 5 weeks. So these 5 weeks. So 1, 2, 3. Let me zoom in a little bit more. Pardon. So this current week plus 2, 3, 4, 5 have actually been consolidation inside these 2 weeks. So this is a little bit advanced, but it's the concept of call them compound candles. So when you take 2 candles and you combine them, what range does that give you? What kind of price discovery does that entail? And so you should be able to see visually, if you almost kind of draw your eye draws a box around these 2 and makes them into one candle. These 2 are just oscillating in between that. Because this one makes a low below this one, but it doesn't get anywhere near the low of this one, for instance, right? And so that becomes your new kind of range, right? So basically from there to there. Right. And we're still, again, so you can see it now, we're even inside that range. And so the range is getting tighter is what that means. There's going to be an explosion in one direction or the other. I'm assuming it's going to be lower because this move started lower. So this was a low down move. consolidation, hammer. Like you would expect that this ends with some kind of big red bar like that, right? Doesn't mean it has to end that way. It could certainly go in the other direction at some point, but you expect this to be your conclusion, right? That's what the market structure would suggest. I mean, that looks almost perfect, like something you would see out of a textbook. Obviously, it wouldn't be great if you're long. So that's the way I would think about it. And if you just put a finer point on it, I just switched this over to a 2-week candle. So each candle here is 2 weeks. And you can see that maybe a little bit better. Now, I don't want to confuse people, but I'll flip it back to the weekly candle. So you see this big red week here, right? When I flip it to the 2-week version, you'll see what they're doing. What the program is doing is it's combining this candle and this candle together. Because what you'll see is there's a red candle, but it has a lot of lower wick. And that's why I always say a lower wick means it's a rally on a lower time frame, right? Which is essentially that's what happens when you combine these two candles. So look at that, right? So it's this candle here. So again, you can almost think of it as like when you smash the candles together, that the green candle creates this wick on that red candle. So instead of having one big red wick, or excuse me, candle, you have a red candle that has a lot of lower wick. So all that to say, you can see now that this candle, this 2-week period is inside this 2-week period, which is inside this 2-week period. So we're gearing up for an explosion at some point. More importantly, because we are in decline in the long-term cycle, so you look at the monthly chart, you can see we topped out on month 25, and we made this little double top. You would expect the move to be lower, right? Like that would be your expectation. Very, very reasonable. And if we look at CCJ versus SPX, we can see it just made a swing high in October, and we're now getting a little bit of follow through in November. And let's see, what is URA versus SPX? I think that actually topped a little while ago. Yeah. So URA has actually been underperforming the SPX for a little while now. CCJ has been kind of holding things up, URA being an ETF that tracks uranium. What has URNM been doing versus SPX? Let's see. So that has a similar thing. So yeah, it topped in November or October 2021. So right around actually when other major like very risky quote unquote assets did, like crypto, NASDAQ, etc. Okay, so let's flip over to the commodities, because let's just get a sense of like, because that's the big picture, right? And so this is your commodity, your CRB commodities index. This is your monthly chart, and you can see I won't go into so much detail here because I'll do a separate video about commodities in general. But like, look at this massive rally. That's 26 months. So we got our top in June 2022, and notice the S&P topped out in January 2022, and the NASDAQ topped out in November 2021. So this thing kept running for longer, right? This is your top for the NASDAQ. Like, that's important context. Like, look at that visually. That's actually just the red month that took down the NASDAQ, and the NASDAQ has been declining ever since. That just became a higher low for the commodity index. But all good things come to an end, though, don't they, right? And so here we've clearly started a long-term cycle decline, and you can see from this current monthly candle, so we're on month 31, we're nowhere, like, this is like screaming at you that it wants to go lower, right? This line here is a 50-month moving average. Doesn't mean we have to touch this. And also keep in mind that this is rising. So you could easily see this is something like a 36-month cycle, right? So about 3 years. And so that means we could easily have another 5 months of left in the cycle, and we're in a downtrend. So we would expect lower prices. And that's going to put pressure overall. Like, that's just the context that we're in here. Which is important to note. So let's look at the some of the winners now again. So let's start with UROY. So UROY is getting closer back to that $3 level, and you can see again the big thing that I'll point out with UROY is still nice and green on the month, whereas a lot of uranium is not. Right, nice swing low as well, but we are inside this range, so we need to get around out of that above 336. But this is actually looking positive, and if we look a little bit more micro on the weekly level, we have a nice little swing low, right? And this is a higher swing low, right? So we have a swing low here. I'll just get rid of these. So we have a swing low down here. That was the week of October 31st. And we got a little rally. We had this little scary event, and now we're getting another swing low. So you would expect we're going to go and challenge this level up here at 307. So this actually looks nice for a trade. I'm just making a note here. Interesting. Uroy. Okay, so that's Uroy, and that's your weekly chart, right? And as I said, monthly is looking nice and green. As we think about the daily chart, though, so this is now looking to me like we have a daily. Well, actually, we're pretty. So what was that? 1, 2, 3, 4, 5. Yeah, we have a top on day 7 so far. So what we're really seeing here is are we going to be able to day 8, 9, 10, 11, 12, 13, 14, 15, 16? Are we going to be able to make a new high in a daily cycle so that day 7 is not our top? So that's really helpful. That gives us some really good context, right? This cycle lasted 24 days. This lasted 28. This lasted 26. This is when I was looking at this last. What I've done here is just assume that this cycle, let's say, lasts 24 days. Like you might get your low around early December, or December 8th to be specific. The bad news here is that we're already on day 16, and this thing tends to have shorter cycles that are like 25 days. So we've already chewed up a lot of time, but this does give you, a chance of, trying to recapture this level, which also happens to be right where the 200-day moving average. We're going to have to slice through that because you can see the 200-day moving average is declining, and at some point it'll probably flatten out if we continue a rally. But we're going to have to slice through that 200-day moving average to get to this high. So that puts us in a really interesting spot. Let's look at NXC. That was the Nexgen. That was the best performing of them all. So on the daily chart, not looking. So Uroy must have some kind of fundamental catalyst, maybe. Nexgen certainly not looking as positive on the daily chart. So just if let's talk micro here. It's a big inside day, right? Everything between 447 and 426, right? The high and the low, it's really just consolidation, and it's beneath 2 swing highs. So that's interesting. That could also be telling you that Uroy is going to get pulled down, interestingly enough. And we're red on the week, unlike Uroy, which is green, and it's an inside week as well, just as it was an inside day. That's important to know about. And how do we look on the monthly? The monthly is still green, but barely, and we're obviously about to close very soon. So this is starting to weaken, actually. That's interesting. And finally, Paladin. Let's look at Paladin. So Paladin is green on the day. That's good. Beneath a couple of swing highs, not as good. And to be clear, Uroy, is beneath a few swing highs as well. It's just more bullish on the weekly chart because we have a weekly swing low, whereas for these we don't. Like, look at this. In fact, and this is your weekly chart. In fact, this is a bear flag, right? That's not great. We would really need to get above the high from this week, which is 82 cents, and we're down here at 78, so not too far away. And for Paladin, the month is red. That's not great. So that sets you up for November opening and maybe having testing below this kind of consolidation zone. So maybe getting even into like the high 60s. Interesting. Okay, so we'll leave it at that. We looked at the 3 that were kind of doing better, but as we said, like broader context, we're declining into a long-term cycle low. So uranium is definitely not the sector to be in if you're looking to outperform the market. But we'll leave it at that. Thank you.